Okie dokie, Doc here. Let's see, we got this here. Yep, there we are. All right. Good morning, good afternoon, and good evening, and happy holiday in Latvia. Saw the PMI in Europe. Kind of a positive thing there. Surprise, surprise, huh?
Help us keep you
Whoa, there's that commercial.
from injury. We are tipping the cap to strong working folks around the
There
world.
we are. Yeah, how about that? PMI, huh? Now, I saw a more interesting thing is that Italy is working on their own cryptocurrency. And in many ways, that does not surprise. Oh, I'm the only one here. There's two. Where there's one, there's two, as in science. And so Italy working with a cryptocurrency, the central bank there. And there's three. Hooray! And Latvia's holiday. And what else have we got going on here? Trying to think what are the few things. I'm repeating myself at this point, but I just want to lay it all out. You can see here, that's gold. Gold has been firm for the last couple of days. You can see that right there on the J4X. You can see the lines are driving up, but we'll see. We'll see what happens with the gold. Maybe let's see what the contango is while we're on here, and then we'll jump over to the euro. See what's going on with the euro. Nope, not there. Not there. Up my sleeve. Day week. There we are. No, that was the right spot. There we are. Let's go find gold. That's crude oil. And gold. There we go. So it's trading at 73 on the future, as you can see right there. Let's see, lift this up just a little bit, like so. Bring this down a little bit, like that. Oh, let's see, like that. There we are. Trading at 74. So the contango is at $14 wide now. And what we're seeing here is that the product is having its issues. The width of it tells us that there's something going on. Obviously, it's telling, and what we were guessing generally would be right is that the market is stressed, and the bids and offers have to be, the contango has to be wider because of the arbitrage that's trying to be played out. And so again, in that deliverable world, hence the cryptocurrencies, you see this going on in the metals market here. Now, I was thinking about gold, and we can jump back to the euro and the currencies in a few seconds. But I was thinking about gold last night, and I was thinking how, I saw someone put a headline up, wrote a story about the idea of 3,000 gold. And I thought to myself, wow, 3,000 gold, what would that take? What calamity in the world would that take? And you'd have to imagine that it would have to be a central bank calamity itself. In other words, the central banks they lost the populations on the earth had gotten totally uncomfortable with the central banks, and I'm talking about the money managers and the mutual funds and entities like that, and that's awful hard to believe, because you have to imagine that the governments can raise or lower taxes to a great extent. So if they can get away with raising and lowering taxes, then I would think, and regulations, then I would think that it would be very hard for them to just walk away from the central bank. Instead, it's all part of the game, and they're part of the gang, and everybody's playing the same game, and so forth. So I really thought to myself, 3,000. Then I thought to myself, there are so many currency pairs that are trading at all-time highs against gold at this point. The gold itself is trading all-time highs in something like, I think I showed in one of the webinars about 2 months ago that it's about something like almost 80 different currency pairs are at record highs, and some of the biggest named ones are like the euro and the GBP and so forth. So I mean, it's not like it's the Zimbabwe dollar or something like that. We're talking about mainstream currencies, or as a lot of currency traders like to refer to them as the majors. And so I was thinking about that, and I was thinking, what is it really saying that the dollar against the euro is pretty stable versus some of these other currency pairs that have gold now at record highs in their current. So in other words, that makes their currencies less valuable, right? I mean, if the gold in your country is at all-time highs, and it's related to the translation of your currency, then obviously the gold is outperforming your currency, right? I mean, it's a simple, equation there. So then you take a look at it again in the dollar terms, where it's like $200 underneath all-time highs. And to be exact, I think it's like $228 or something like that. $226 all-time highs away. And so, what does that say over the last bunch of years behind us? And that is obviously that the dollar is holding on to its value. In other words, if you bought an ounce of gold in 2000, I guess it was 2009 or 10, is it? Or yeah, I guess that's what it was, 2009. Let's go take a look at it on J4X. Let's see if we can get how far back we go. Go to the months, and if you bought it there, obviously your dollars gave you a better return than your gold position. Now, does the gold obviously make you feel much more comfortable? That is for sure. Most people are kind of frustrated. Let's make this the whole page too. And so a lot of people are frustrated with, see, there's the all-time highs going into 2011. And let's see, right there you can see 1820, what's the high? 1920. Okay, and then there's 1911. So that's the all-time high is 1920. It didn't really get the $20. Now I thought one of the futures contracts had gotten up to like $1,998 or something like that, but maybe not. Either way, that's where we are with the product in 1900. So we're really looking at $140 away. Now, obviously, if you bought gold up there, and against dollars, obviously you're losing money. You're not gaining it, but it's starting to get back to it. And so over the last, 9 years, obviously the dollar has had more of a value than gold, which is, not exactly what me and many other people would think with what's going on would be the norm, but it is the norm. And so, it's an odd story altogether when you really think about it. The idea that gold has been underperforming the dollar for like the last decade, with all of everything going on, and the potential for inflation, the lack of direction for a certain period of time there in capitalism, where it was more geared towards trying to turn America into a socialist state. And then, and then last, I guess you could say the last 3 or 4 years, not even last year and a half, 2 years, going back to the middle of 18. It didn't take out that. It looks like a reverse head and shoulders too. If you're looking at from 213 here, and then you can see, I guess the reverse head and shoulders would be something like that would be the head. So in 2015, and it's heading back to those all-time highs in here. So it made me think about it. It's like I said, it's unique to see the dollar outperforming the metals market, whereas pretty much most of the rest of the world, the dollar is, and again, that's why we always say the dollar is, or not the dollar, but the all the big products that are denominated in dollars, like oil and gold and silver and so forth, soybeans, I guess soybeans are, and wheat and corn, anything that's denominated in a dominant way in dollars is a surrogate for the currency. And so you buy euros, instead of selling dollars, you can sell corn, or you can sell gold, or you can sell silver, or, something else. In other words, anything major that's denominated, you can sell oil, because that when you're short any one of those products, you're short dollars. And just like as if you were just selling dollars against euro, in the pairs trade. And so you're short that product, and now you need to buy dollars to flatten it out. And then obviously hedge the underlying product for its asset value itself. So that's where we are. And I don't know. I thought of it, and I was thinking about it when I saw the headline, like, gold 3,000. I didn't read the story, and I'm not even sure what the story is about. Matter of fact, why don't I take a quick look at that? We could discuss that, unless anybody has something they want to look at. And then if not, we can do that. I'm trying to find that again now. I wish I had clicked on it now. I regret that I had not, because it did make me think, and I kept on thinking, well, there it is. Oh no, wait. Chinese gold miners continue to gobble up gold companies. Well, yeah, that makes sense. They need to turn that yuan into a hard asset, since there's a good chance that the yuan might be trading at 14 one day or 23 one day. There it is. What needs to happen for gold 3,000? That's what the article was. With gold pushing up to multi-year highs as the dollar begins to sink, many are asking where to from here. Goldman earlier increased their 12-month target for yellow metal to 2,000, but what will it take? Now, what I would love is, imagine if they had a fact check sheet like mine on the screen. Let's go back to that. Like Doc has a fact check sheet on the screen, following our math, telling us how many days or weeks it's in a particular trend. And imagine if they would do a fact check after someone said something like that. Goldman earlier increased their 12-month target for yellow metal to 2,000. Now, I could have sworn I've seen that half a dozen times before over the last 6-7 years, and sure enough, nada, buckus. Okay, so it's great that Goldman thinks that it's going to go there, but the thing is that it only has, it's a, what do you call that? It's a one song band, or in other words, that's all they say is to buy or not to buy is the question. I mean, that's the way they go, and so they have that thing there. Now it says specifically, Goldman believes inflation will need to move above the Fed's 2% target, and this move to be met with a muted policy response. Historically, gold relationship with inflation is nonlinear. I would like to know more than anything else. I would like to know what Goldman's success rate is about protecting the price of gold. That's what I would like to know. And that's the way I ride, because I look at historical events that occur, or just any events that occur, retain them, and then after years of seeing that it hasn't done that, I look at the news from those sources and I go, yeah, okay, they're right about, 2 out of 10 times. Whereas Doc's math is right, 8.5 out of 10 times. And that's what the fact check sheet shows all the time. And so, it really caught my eye. Thought, 3,000 gold, why not, But in this case, the article goes right to 2,000. It says that the yellow metal, it says Goldman thinks in the next 12 months it could go to $2,000, which is what, $230 away in the futures contract? I mean, come on. I mean, that's not exactly the wildest and craziest thing. Hey, Kristen, how you doing? I'm doing fine. I hope you're doing fine too. Let's take a look at the euro. Thank you for jumping in and getting me off this this tangent of mine with the gold. And there is the euro right there, as you can see. We're into the 113s. I think we're in a sell, aren't we still? Where's that spreadsheet at? We're in a weekly buy and a daily sell. That's what it is. 5 by 5. There it is. 5 by 5. So we're in what we refer to as a neutral stance. On the long-term trend, we are saying that the product wants to go up on a weekly basis. Let's put a weekly chart up there. See? That's the last 5 weeks, and we've been in a long, this is the 6th week now. And we've been in a long since, let's say, 3, 4, 5, 6. Yeah. So since down here. down in the 10 what's that? The 108 area, 108.25. And then let's take a look at it on a daily basis. We've been in a daily sell for 5 days. And so you can see here, boy, it got very close, I guess. Look at the bounce and all like that. And I imagine when we go to, let's see if we can do it like this. We'll bring this down a little bit. Let's take a look at the euro on the Chicago Quant chart. Let's first try to find the web page. It's Dookie Day. Is it Dookie Day Week right there? And there's the euro. You can see it's climbed through, and it's dancing through the daily buying area. And so maybe it's going to get some. It's going to get jazzed and get rolling along there. And you can see here on J4X, look how low it went. It could go. It went down to the bottom, and now, as a matter of fact, what was it saying there? It was minus 1.99. So it was not only not plus, it was minus. So you see it lifting up here now. How's that? What else, Kristen, would you like to know? We can take the euro apart a little bit more if you like. Let me know. We'll gladly get involved in it. Doc likes doing that. Doc's multi-subject. I can go in any of these market directions. No problem. All right. So that's the euro, and you got to remember, traders. Chances are, when they're buying euros, they may not be selling dollars. They may be selling something else to get into that position, and all you're doing is feeling the euro push. And I guess you could say, if we look at gold, can gold really be what I was thinking about the 3000 article? And, just the headline, because I told you I didn't read it. But one of the things I was thinking about was, could gold really be the most obvious indicator of the metals, of the currency, the dollar currency? That's what I was thinking. That's what made me go on that tangent. I was thinking, it's kind of interesting. Gold is making all-time highs in about 80 different pairs trades, but it is relatively dormant. I guess you could call it relatively dormant in the dollar. And so I was thinking to myself, is that a sign that it is an indicator in the end result? So in other words, as long as gold stays below all-time highs, you could basically, let's put it this way. You look at this, you look at gold right now, and then I imagine if we put I wonder where, when the euro, when gold was at, let's go back to gold again, and then let's take a look at the euro. So, what did I say it was? 2011, right? So now let's go take a look at the euro on a monthly chart and see, where was the euro then? Right up in here, right? So it was trading in the 150 area, right? 150. So it's down like, 3,700 pips. So that's a lot of work for it to get back up into that area. And that's interesting. Is it, I guess in the end result is maybe we don't take the gold serious enough at times as an indicator to the currency pairs. And maybe we should. Might be a way of doing that, trying to segregate gold against currencies, and then you use it to minus out the dollar's effect of the pairs trade, and it could be an interesting concept there. It would be, in some ways, I was thinking in my head, this is all floating through my head when I saw the 3000 title. I was thinking that could be literally a window on seeing how the central banks control the currency. I talk about that. I talked about it yesterday. I always talk about that stuff. I agree with you. I agree with this theory, Doc. Yeah, I was thinking the same thing. I was, great minds think alike, Kristen. I was thinking maybe it would be a window into how the central banks truly are keeping all the pairs trades in line with each other. And when we see the distortion between gold and the dollar itself, and obviously in a long-term view, it didn't exactly do the best. It wasn't able to really, outperform at all. The dollar's actually outperformed gold, which is kind of odd. I mean, when you really think about all the circumstances around it, what's going on. The combination of more assets being created, more assets being purchased. See, that's a good thing. See, they're not really spending the money to generate inflation. And that's another thing, too. That would give us a much more clearer doorway into or a window or a view of inflation. See, I was thinking about that. And you know what? They may, the central banks might be walking around laughing every day going, how about that? Nobody seems to understand. There must be some of these economists at some of these hedge funds and mutual funds and so forth. Some of them must be catching on to this idea. They probably have been doing it for a while. I myself, I'm such a quant trader, I don't really pay attention to the fundamentals. But that could be a fundamental well worth watching, and that is the gold and how it reacts to the pairs trades itself. And I've probably subconsciously been saying it because I say it's not a pair anymore. It's more like a three-legged stool. So in other words, it's not like 1 and 1. It's 1 and 3 or 1 and 4 or 1 and 5. So in other words, you could be selling oil or you could be selling silver or you could be selling gold against buying the euro and not even offering out a dollar in a sense. Because, I mean, if you sell, let's see, how would that work? Where do you buy it? If you're buying the euro and you're officially short the dollar, and then you buy something that's dominated in dollars, then you could offset that, right? So in other words, it makes the dollar stronger in a sense, not weaker, because you're buying something that's denominated in dollars. Doc, what is happening with yen? Let's go check out yen. I think it went into a buy. No, what did it do? I think it drifted underneath the weekly sell. Let's take a look at that. A lot of this stuff is really hesitant to get going in any real direction. Let's see, right there. There's the yen. And it's loading in on J4X there. A lot of up and down last session. Yeah. Well, that was the Chinese slash trade rumor stuff. That's what that was. I can explain that after we're done this tangent. Okay, so you can see it's moving down. And that's line 19, right? Yeah, so we're 1 week in a sell. So it's doing what it's supposed to be doing. And 4 days in a sell. So we checked the fact check sheet right there. And what it shows us is that we are a bear. Hi, I'm an Aries. We are a bear in the product, and it's going down, and that's what it's supposed to be doing because the math told us that's what it was doing. Now, last night, what happened was, I guess it was the trade. What's Peter Navarro's title? Let me see what his title is. I think he's. Let me see what he came out and he said something about how we're kind of coming to the end of trusting the Chinese. Just because of what they had done with the virus and all. And so, utterly irresponsible. No matter what view meeting last night, tweet shouldn't possibly provide any comfort. Let's see. Obviously, we can find how to spell it right. Peter Navarro's. Let me see what his title is. Let's see. Came out with a statement last night, and the market interpreted it as that the trade deal was dead. Let's see. Peter Kent Navarro is an American economist and author. He serves in the Trump administration as assistant to the president, director of trade and manufacturing policy. Okay. So he came out and said that they had no faith in the Chinese or something like that, and that it was done and over with. And the markets interpreted that as what do you call it? The trade deal, which the trade deal is fine, moving along at its slow rate, of course, but it is moving along. So the market fell apart. You know, let's see if we can show you a short term what it did. The stock markets, the yuan, you know, everything went kapooey. You like that? That's a scientific term, kapooey. And let's see if we can find it here. Yeah, everything went kapooey. Like I said, it's a scientific term. And then he came out with a statement, I guess like a half hour later last night, and said, no, we're talking about our confidence in them. Let's see, where's it at? There it is. See that move right there? That's what it was right there. That happened around 9 o'clock last night, our time, Eastern Standard, which was kind of like probably like 2 in the morning in Latvia, or 3 in the morning. Let's see, 7 hours. So 3, like 4 in the morning in Latvia. You can see it woke up, straightened itself out within like a half hour, and here we are at all-time highs again, and not in the S&Ps, but in the Dow, in the Nasdaq. So okay, cool, huh? All right, yeah. So they went kapooey. That's a economic science term. Yeah, kapooey. All right, now let's go back to the euro. I'm sorry, the yen. There's the yen, and you can see, is that the yen? Yeah, that's the yen. And you can see we are moving down. I guess we went into a sell. I guess we put that right there at this point. So right there. So we went into the sell right there. 1, 2, 3, 4, 5 days back. Today's the 5th day. We're 4 full days in a sell. It tried to go into a buy, but just failed. It just couldn't get through the plus side here. And so you can see the weekly is dipping down fine. And that's what a fact check sheet does. It keeps track of the record of the math. And then no one can say, geez, Doc, how come you're always wrong, but you're still talking? Why is that cake hole of yours moving? There you go. So that's what that was all about. All right. Does that answer your yen? That yen, you have that yen for a yen answer. Right? You have a yen for it. Ha ha. Ha 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 ha. Okay. All right, and you can see here J4X, same situation, burying it alive. Alive. It's being buried alive. And you can see the bounce out of here was nothing. Whoa. Rolled that puppy over. Okay. All right. Where should we go from here, Kristen? No one else is asking any questions, and Doc will just go ramble about something. So why don't I ramble about something you'd be interested in? You have anything else you're interested in? If not, I'll go ramble about something. I can ramble about a lot of different currency pairs. We didn't even look at the cable yet, so we can do that right now, where you're trying to figure out if there's something you want to look at. And there's cable. And you see it's doing its little bottoming thing. That's line 13 on the old spreadsheet there. We're in a weekly buy for a whole 4 weeks. And you can see here, this is a daily chart. And so that's like 5 right there. And then that's like 10. And that's like 15. That's like 20. So it went into the weekly buy back in here. Let's see if we can find it on the Chicago Quant chart. Right there. I say, boy, right there. Right there. And you see that right there. And then you can see it's trying to get in through its daily buy number there too. Yeah, let's go check out oil. Oil we are. All right. Let's check it out. And then what we could do is we could take a look at NASCAD, the currency pair that matches to the oil market. Where is it at? Right there. There we go. And as you can see, oh, we got the oil now over in the 41s again. That's what I was talking about yesterday. That's what I'm talking about. Remember that? I was saying that. You know, I mean, to me, I was always looking for the 33s to 39. We got to the 39, and it blasted through 41, and I figured it would choke a little bit until the election in the low 40s. If that would be the best I would expect it. But the more Mr. Trump looks like he's going to win big, obviously the markets are going to jump ahead of that stuff, you know. All right, so now, yeah, this is a setup. This is like, what was it? Was it the silent do-good letters? Was it Ben Franklin, you know, our Leonardo da Vinci here in the United States? He had a newspaper, and he would write, you know, he wanted people to ask questions, and so he created a writer that would write in and ask questions about things, and it was called, and the name of the writer was supposedly Silent Do-Good. It was supposedly a woman, and it was Ben Franklin really writing these letters, and then he was answering them. So you know, it's like Doc and Kristen, you know, just going right into my wheelhouse. All right, here's oil, and that's line 5 again on the fact check sheet. We should have music that goes on behind that. Dun dun dun. And it's been 7 weeks in a weekly buy, 18 days in a daily buy. Yo ho ho, and a bottle of rum. And you can see J4X ripping up, not even going down into like the minuses, just turning up and zipping the doodah over like the last 8 or 9 days too. Funny like in being funny like a clown? You think I'm funny, huh? Like a clown? No. I'm funny, right? Yeah, like funny haha, or funny like a clown. I like to do, remember, that's a movie scene. Doc was always doing a movie scene from here to there. All right. Why, thank you. I think I'm funny, too. Like a clown. Doc is funny like a clown, I think. All right. And then you can see here oil. And, oh, that's cable on the J4X. No, I mean on the Chicago Quant. Let's go back to the Chicago Quant and find ourselves Mr. and Mrs. Oil. I went by this old opera house, you know, down here in southern New Jersey, you know, in a place called Woodstown. The town was established in 1720, and they have an old opera house. It's still functioning, but they do stand-up comedy in there. And I know that you and I think 54 and a few other people have said, you know, Doc, you should try comedy. And I was thinking about it. It said open mic. And I was thinking, you know, I might. I just might. You know, I mean, I don't have any problem with that. You know, I'm a brave soul. And so I might do that. I could be like the comedian of economics and trading. I mean, is there really a comedian out there that talks about economics and trading the way I do and make jokes about it? So, well, I think I might do that. I think I'm going to go to a stand-up a mic place, open mic night, and do 10 or 15 minutes of market commentary and jokes. Now, I'm not sure how good I'll be without my charts, but you guys think that I can be funny on a stage. You think so, Kristen? You think I could do that? I mean, I know I can do it. I mean, I know I'm brave enough to do it, but, you know, I'm really serious about that. I'm really thinking about it. And over the weekend, we went by there, you know, driving by there for to go to one of my son's homes down that way. It's only like about 18 kilometers away or something like that, you know. That's all it is, like 18 kilometers. So, Yeah, I was thinking, I could drive right over there and do that one night. All right, let's go find crude oil. It's August crude oil now. There. You think so? You think so, 54? I could be an economic trading comedian. I just thought that up just now. I mean, I would get up on there and talk about markets and so forth, and make jokes about some of the people we see on the financial news networks, and then some of the brokerage houses and so forth. And I could tell people about some of the stupid things I've seen people do in the financial markets, and then talk about the characteristics of people trading on the trading floor back in old days, and what they used to do, and some of the stupid tricks. Oh, we used to play tricks all the time on the trading floor. It was like one big schoolyard. Oh my God. I mean, just crazy stuff. I mean, crazy. So, let's see now. All right, so where are we? Oh, yeah, we're looking at crude oil. All right, so anyway, funny like a clown, huh? Yo, hey, yo, For me, an intelligent people in the one that has the humor. Okay, I bite. Sounds good to me. I think I'm sharp like a bowling ball, right? I'm as sharp as a tack. Yeah. All right. Let's see. There's crude oil. Boy, look at all those green dots. I mean, I think we looked at this yesterday. Look at that. Lots of green dots. It's been in a weekly buy since all the way down in here in the 26s or 27s or something like that. And because we are dun 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 looking at the fact check sheet right there. Doc's fact check sheet right there all the time. Immortalized on YouTube through Dukascopy every day, week, year, month. No, every day, every week, every month, every year, and heading for a decade of it. How about that? All right. Let's see. What else can we say about that? And you can see, like I said, on J4X, you can see that the lines didn't even go down to the zero line. And this baby's just been leaning in the up direction. Look at it. Most of the time, the white line finds a way to stay above all the rest of the dashes and the rate of change. And then just this weakness of about 4 or 5 days, they knocked it down, but it couldn't go down to the zero line. And look at it. It leaped. Like right there, it leaped. It just leaped right up and started to run again. I like that, Kristen. I like being labeled intelligent. I think that's so cool. I like to be considered smart. Because sometimes I think I'm as sharp as a bowling ball. All right. Let's see. What do we got here now? But I like the idea. I could be like an economic comic. That would be cool, huh? All right. All right. Now, where are we at now? Oh, yeah. So oil. Wow, look at that. It just pulsates along, It doesn't even want to quit. Let's see. 54 says, today, pound ran up on the primary manufacturing number. Yeah, I heard PMI in Europe was really good for 2 months in a row now. Number up to 50.1. Look at it, Doc. If I eat 20 cookies every day yesterday, I like where this is going. If I eat 20 cookies every day, and then I'm going to tell you about a friend of mine that used to do something like that. Anyway, let's see. Let's go back to that. So look at if I eat 20 cookies every day yesterday, I ate 1 cookie today. I ate 2 cookies. Therefore, my consumption went up 100%. Wow. Yes. So you're basically telling me that I had a feeling it was that way. I get the spirit of exactly what you're talking about. I totally agree with you. And I had to do a double take when they said 2 back-to-back months in a row up. Oh boy, we should be excited. I thought to myself, yes, but where is it coming from? And you know what? You know what's missing out of your analogy? The bag that holds all the cookies. So in other words, let's say there were 22 cookies in that bag, or 23 cookies in that bag. Let's make it 25. Let's say there were 25 cookies in that bag, and the first day you opened the bag, you ate 20 of them. Okay? You could look the other way around and go, wow. Not you. You were already doing it. You could look at it and go, okay, all there is 20% of the cookies left. That's it. Right? And so then you go and you eat one cookie, and now you did it again. You lost another 20%. In the beginning, you lost 80%. Then you lost 20%. Someone could say, wow, it's losing less. But you're getting ready to run on empty. So then the next day you eat 2 cookies. So now you went from 4 cookies to 2 cookies. You lost 50%. And now you got only 2 cookies left, and you're going to be out of cookies. And that's something that the media just refuses to talk about. And that would be, I'd have to be really, really simple-minded in my jokes, you know? I mean, you got to imagine, I'm probably pretty funny here because, like, haha, funny, because you're all trading and you have a general idea of the same irony and the same frustration that I have, and what we're all hunting for all the time is victory, 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 right? You know? And so the media, I think I'd probably I'd have to probably tell stories about the optionettes, In other words, I couldn't talk about the options derivatives per se, on the options exchange floor. I could mention the options exchange floor, and I could go right to Drexel Burnham Lambert and Michael Milken, and I could go, those guys were so sharp that they hired blondes and put them in salmon pink jackets because most of the trading floor was all men. And so, you had 9.9 out of 10 traders was a man. And the females were clerks, so they put a female on a seat and stuck her in the middle of the crowd. Do you think that they had a hard time finding a way of getting orders executed when you put a blonde in the middle of the trading crowd in a pink jacket? No. They were real happy to go and fill her orders in a heartbeat. Whereas if you were a guy walking into that pit, you had no interest in filling those orders. And so I guess I can talk about the comedy of it in that nature, and then kind of make a joke about blondes and make a joke about the fact that they kept on hiring intelligent blondes, which was really weird. Because, back in those days, for every blonde on the floor, there were like 10 blonde jokes. How times have changed. Now, there's probably only like 3 or 4. Anyway, there you go. There's my first stand-up shtick. There you go. I just did it. So you guys think that would actually go over big? I guess with increase the alcohol, if people have alcohol and they're drinking it and listening to me ramble, you think that could be a positive? That could be a positive, right? Yeah. Maybe I could take questions even. How sometimes the soothsayers, the people go to an event, and the person on stage is supposedly capable of, reading your mind or something like that. Maybe in some ways, and he yells out to the crowd that give a question or something like that, and it says, "Ma'am, where are you from?" I'm from Timbuktu. Okay. I guess I could do a combination of back and forth like that. You guys think that would be funny, huh? Because if you two think it's that funny, then I might actually try an open mic night somewhere, just for the fun of it, just to see how it plays out. Preferably that it has alcohol, though, I think. I think the logic would be is like the squeaky wheel, it needs grease. And in this case here, the audience would need a little alcohol to put up with me, I think. All right. So there we are with the oil. Do we have any other questions about the oil? We've been in a daily buy since all the way down here in the low 33, 34s. And haven't seen since that red dot, we haven't seen a red dot in so long. It's like that long. So, all right, there's the oil. And like I said, I think it's going to follow the Trumpian as success. Oil could literally be the success of Mr. Trump in a very odd way, and that is that if you think that the world economy is going to turn around and start to move, you would assume oil would go up in value, right? That makes sense to you? That makes sense to me. So, oh, that's the robot talking. So I think that's the way it goes. All right. What's next? We did gold. Did we do gold? I think we did gold. Did we actually do gold, or did I just ramble about gold? I think we looked at the contango, right? So let's go to dun 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 fact sheet right there. All right, now let's go take a look at gold. There it is right there. And you can see, the strength in it there. And that's line 6. We're 2 weeks in a buy. We're 4 days in a buy. Let's see. The China deal is another comic. Went from off to on in 5 minutes. Who cares if you can print $50 billion in dollars during a lunch break? There's a lot of interesting points on that one. I like the idea of the lunch break thing. I wonder if they do that. Now remember, they don't print it. Matter of fact, most of the mints are kind of closed right now. But what they do is they line item it on a spreadsheet. So the assets are there, and then they move it around like a fake Bitcoin in a sense, or not a fake Bitcoin, but like a Bitcoin. Like a not a fake Bitcoin. What's the way to describe it? When the central banks move money around electronically, but just like a natural, competitive or comparable product, electronic money, just like the cryptos, And so the central bank, in many ways, is doing its own cryptocurrency, and we're not really seeing it. Remember, that's how the money is really coming into the economy, is that they're line iteming it on a spreadsheet, and they go, okay, let's see now. Citibank, it's got what do they need? Oh, they need another $9 billion. Okay. Market down at 9:17 on June 23rd a.m. We credited Citibank with $9 billion. Okay. Boom. They hit the button, and it's there. So it's not like it's going through a printing press and they got to buy ink, and then they got to buy the paper, and then they got to distribute this stuff, and then they got to put the slippage in there for the what do you call it? The counterfeiting. Instead they just line item it, and you're right, probably over like, hey, did you increase the money to Citi, Goldman, and like you ever see people yelling at each other in a warehouse? You wonder if they do that in the offices at the Federal Reserve. Hey, Mike, did you add that $50 billion at lunch? No, I only did 36. Well, get on the ball, man. Put those two. Where's the other two sevens go? Or is it 14 in one place? Oh no, I gotta look. It's not like they're cranking up the old printing machines and buying the paper and waiting 6 weeks for the trees to die and then being turned into some magical currency. Oil did not rise with the equities today as strong as it has done past couple of weeks. Is that a sign it's topped? Good question, Daniel. Let's take a look. All right, so what do we got there? I got gold. So let's go back to oil. That's a good question. All right, so yeah, you can see. Let's see if we can widen this. You can see it's barely moving, but in some ways it has moved. Look at the high today. It went up to 41.60 from a close yesterday of, let's see, let's move this over if we can, like right there. So it went to, yesterday it settled at 40.54, and today it went up $1, like $1.05, right? Let's see, let's look at that again. So 40.54, and then today's high is 41.60. So that's $1.06. So there's $1.06 open and close right there. Look at the tail on that thing. It was down more than it was up. and so it was down almost like $2, right? So let's see. Was it that low? Yeah, it was kind of like that. It was down a dollar. It was down a no. It was down 90 cents. The low is 39.72. Nah. So why is the tail so long? I don't know. It looks like it went up. Now the question is, does it mean it topped? Until we see it over here on the math, right there on line 5, line 5, on the fact check sheet. When we see it go into a daily sell on our quant, see like right there, it doesn't look like it wants to. You can see the weekly being the same way, holding up pretty damn strong. So I don't see that as any indication of topping out. I would say more than anything else, it's what they refer to as resistance. Let's look at it on J4X. It's a good way of looking at it. See how the line is there? And you can see the gap would develop there, and they're kind of closing the gap finally. That was the one, I guess, that closed the gap. And then a couple of weeks later, now we're visiting that spot again. So I think all it really is telling us is that traders are looking at it and they're saying, okay, we've been here before. We sold it down, and here we are back here again. And maybe like the PMI and some growth, as 54 was saying. They had a bag of 25 cookies, and someone opened them up and ate 20 of them in the first day, and there's only like 20% left. Could there be only 20% left in crude oil? Possibly. I kind of think it's going to stall out, and I've always said that the highest I'd expect it to get into is the low 40s. On a big spike, and it did do that. I guess you have to say that we're in a weekly buy for 7 weeks and a daily buy for 18 days. Wow, I would think that categorizes as a spike. There's no doubt about that. So Daniel, I don't think it's telling us that it's topping out because of the width of the range as you're looking at, but I think it's topping out because it's been here before and sold off from here. As you can see on J4X, it's become support back in when was this, 2018, between the third quarter. It was support there, and going all the way back to, I guess it's like 2017, right around in here. Let's see if we can do that. Oh, I guess right there. So what is that? That is 2018 in March. I would say that. I think that's the best way to look at it. I don't think it's indicative of topping out. It's just slowing down because of the chart pattern. In this modern era, we have noticed that charts are much more accurate than they've ever been before, looking at supports and resistances and some of the other tools out there. Markets seem to have... I think it comes down to the fact that Wall Street and the financial markets in general have a lot of young people in it, and so they're actually taking these technical tools and taking them extremely serious, which is fine. And when I first started in the business, when I was a trader at the Philadelphia Exchange, not even a clerk, when I was a clerk for the Philadelphia Exchange, you would see these statistics, and money managers would use technical analysis. Like 14% of the money managers would use technical analysis out of all of them, which is a really low number, and and would make financial decisions. It would be even lower. Some of them would say, we look at the technicals, but we only make financial decisions on when to buy and sell, say 7 or 8%. And they actually used to refer to it as voodoo, not the money managers, but almost all managers referred to technical analysis as voodoo. Something that was not necessarily very scientific and informative and accurate. And so as the decades went along, we saw that climb much higher up into the 20s and lasted in the 20s for a long period of time, 28, 29, 30%. And then all of a sudden there was this big leap going into the turn of this century, especially back in 2007 and 2008 when quantitative easing got going. Then all of a sudden, the technical analysis really started to dominate. You can see it. Going into 2009, about a year and a half after the collapse of the mortgage market, the collateralized debt obligations, the CDOs, and so forth, you could see that technical analysis was definitely a predominant, dominating factor. And now, when you poll money managers, it's up in the 50 percentile. It's higher. It's like 56, 57% actually use technical analysis. So, in this case here, I think we're reading the technical analysis, and I think, as I showed you on J4X, you can see it there. I think what you're really looking at is, the gap, technical analysis trading with the gap and how they expect to see it close. You can see it had made a low there on some type of news from a big slide from the 70s, where it had, climbed from the 30s to the 70s. And so I think that's what we're really looking at, that type of action there. I hope that answers your question, Danielle. Daniel, no problem at all. All right. And if not, I can try to take it a little bit further if you're interested. Let's see. Where are we at now? Let's see. So we're looking at crude, and we looked at the fact check sheet. And as you can see on that thing, I don't know if we can move it over. Where is that? Right there. As you can see, that's a long time. Yeah, the buyers are flying in, Let's see. What's next on this thing here? Oh, what I wanted to do is from gold, I wanted to go look at, was it gold? No, it was oil. I wanted to go look at the loonie. Let's take a look at the loonie real quick, and then we'll call it a day here. Let's see. And that's the New Zealand against the Canadian. Right there. You can see the strength in that, matching with the Earl. See, nice type of moves going on there too. And what did they do? I think did they throw that into a daily sell yesterday? Let's take a look at this. Right there. Let's see. We got to go to Dukascopy day week. Dukascopy day week. Right there. And there's the NASCAD. No, but it closed up into the buy. But it has a red dot with it, so it's you can be long it, because over on the fact check sheet, that's line 20 something right there. Oh yeah, there it is. Okay, yeah. So we're 5 weeks in a buy and 1 day in a buy. Okay, and you can see that thing trying to lift up in the Chicago quant. Let's make that a little bit wider for you to see. See, we move that over a little bit more. Well, that's not working. Let's try it this way. There it is. And you can see how the histogram in the white line had made it cross the zero line. The red dot slowed it down, but and you can see the strength is still coming in. We marked it as a buy. Where is it at? Right there. You can see that strength in there. But it really is the buy like this morning or late last night. You got to give it a chance, that type of thing. All right. Anyway, this is Doc from North America saying everybody have a safe and smart trading day. And for our friends in Latvia, I hope you enjoy the holiday. And we'll be here tomorrow. And as Doc usually ends off, he sings his way out of here. Happy trails to you until we meet again.